All right, highlight to start this particular week with a question. What does a market's price want to do? Well, what do you want it to do when you're long? What do you want it to do when you're short? There's always longs and shorts in the market. So what does a market want to do is based on um, longs and shorts. Longs want it to go up, but up is kind of too general. Up where? They want it to go up to specific targets. And targets is what people spend a lot of time trying to figure out for themselves to get out, but look at it a different way. A target is where price wants to go. Longs if it's an upside target, shorts if it's a downside target. Now, targets are hard to find when we're in blue sky territory. What do I mean by blue sky territory? These are all-time highs we wake up into today. We were gapped up from Friday's close, new highs in this S&P contract. But once you start to establish highs on the session, which we're right in here, and then if you just look at after, if you just look like after the open, and the open was right about here on this side of that yellow line, and the highest that the market gets to is inside this yellow circle, right? And so you look at before that, what was it trying to do? It was trying to get through this high, which was considered the overnight high. So longs want to get out higher highs and then find some upside targets. Shorts want to see lower lows and get to some downside targets. So lower lows are high, day high low. It could be a swing high or low. It doesn't just have to be on the day or on the hour, time based. It could be a swing high or low. These are swing lows in here. Okay, that's a swing low. These are swing highs. But here's the problem: is that a swing high? Let's blow this chart up. Might be easier to see. A swing high is easy to find after we're trading over here and to look back in time. It's easy to tell, it should be easy to see where the swing highs were, okay? But inside those yellow circles is where the difficulty becomes. Is this going to be a failure? Is this going to be a higher high? Is this going to look like it does now in 10, 20, 30 minutes? So it's easy to say I could have sold it in here because it was going to be a failure, but in here doesn't look like that until you start to bend back over. People don't get that, don't understand that. And then they say, this looks like a failure. When does it look like a failure? And then what is a failure? Well, you have to understand a failure is failing to do what? In this case, failing to make a higher high through there or through there. That's it. So it failed to make a higher high. Going back to the original point in this video. What's the goal of a market? Well, you break it up, bulls and bears, longs and shorts. The goal of longs was to make a higher high. Did it? No. Where's the failure? Right there and there. Do you know it at the time? Not necessarily. You could stack probabilities at the time, but it's not that clear until you start to break back over. So in here, in real time, what did we say in the room? What did I say? This has the best look at the downside being the right side and this being left as a failure for a while. These have a chance of being a failure to go through the high. And you're going to have trouble getting and staying long. So be wary of that, because they're going to start looking at that longs and start to try to chase this market lower. Does that make it easy to get short? Life is good and it breaks another 6 points. 6 points on a day like today is actually a good move. Of course, it doesn't make it easy. It makes it easier to find a little bit of a bounce, maybe to sell, and that market starts to roll over. Does it have to roll over all the way down here for you to be right? If that's the case, you're going to have trouble being right. You got to look at being right for a couple points, then a couple more points, then a couple more points. Build yourself up, before the idea is right or wrong. A lot of people have too much expectations in their trades instead of building up to it. But that aside, where in this chart could you realistically say this might be a failure of an overnight high? So going back over this, what questions to ask? First of all, you have to define, what do you mean a failure when you read a chart? Know that. What do longs want to do and what do shorts want to do? And that's going to tell you what the market wants to do. And how good of a job is it doing going up or going down? How good of a job is it rallying or breaking? And that's going to really create some good ideas in your trading. It's going to validate some ideas in your trading, which leads to confidence for the right reasons, for the objective reasons, than just, oh, price is going up, I'm right. Is it validated? How good of a job, how easy of a job is it going up? Does it have ancillary markets like our needle here in the top left, which is each needle's a different index? Is everything strong? Or is a couple indexes strong, couple indexes weak? So it's going to be hard to validate downside or upside when you got that kind of split among stock indexes in the US. So all those things are at play. There's not too many of them, and it's not confusing as long as you know how to line them up. And as long as you know what the right questions are. You've heard me say this all the time in the trading room and in these videos. It's not about the right answers. It's about what are the right questions. What's a failure? What's the market trying to do? How good of a job is it doing getting there? When do you have to be careful at getting long or getting short based on the answers to those questions? You'll get the right answers, but look for the right questions first. Have a safe rest of the day and week. And make sure you subscribe to this channel.